guys. We'll have a look at the economic calendar to start off with. I will then talk about some macro to do with the recent price performance we've been seeing on the indices, and then I'll talk about the technical levels, and I'll probably finish up with the bubbles. So on the economic calendar, we've got the CPI from the Eurozone, obviously very important. We've got initial jobless claims and the manufacturing index from Philadelphia. Existing home sales, crude oil, and then we've got the inflation CPI from Japan. That should be 3 stars, that's high severity. And we've got the policy meeting minutes as well. So fairly busy day, especially maybe keep an eye on this, and especially the CPI from the Eurozone. Now, quite a good article that I said I'll talk about. Are they preparing or panicking? Well, I mean, the price action on the indices have been enough to warrant a lot of fear, right? But we have to remember, all you got to do is take a big step away and look at like the weekly chart, or even look at the monthly chart, and it's really nothing, really, the recent price performance. And we know sentimentally that we're risk on because the retail sentiment, that level there is minus 9.7. So for every one person buying, there's nearly 10 people selling. So as long as that remains true, and they hold on to that bias, then we'll come up because it will want to take their stops. And because these guys are normally counter trend, there has to be someone else to take the other side of the trade. Alright, so that being said, there's been a lot of worry and stuff like down the line that they're anticipating it's going to be a risk event. And so obviously, you know, the market's priced in this interest rate hike with an 83% probability. There's a small probability of a 50 basis point hike, which is quite interesting. So they've priced it in, but they're saying, well, why is the market so spooked? You could argue that there's a wage price spiral, which is possible. The wages rise, the corporate margins are squeezed, the firms raise their prices to restore the margins, the wages rise to offset the price increases, the margins are squeezed. So it's like a sort of a death spiral almost. So that could be a worry from the Fed. However, just like I say, if we just take a step out and look at the big picture, we are really risk on, because, you know, if we were to sell it, we'd be fighting a monster basically. The S&P is the beast. So it's a good article. Have a look, you know, when you've got some free time, some interesting things. But we have to remember the big picture. We are risk on. Okay, lots and lots of stuff to read. Quite a good article. So just remember that. Okay, so there could be something potentially down the line that could be like a risk off, but maybe we'll deal with it when we get there. And I think the market's done quite well considering we are going to hike the interest rate. So assuming that we stabilise now, which looks like possible we are doing, then, you know, maybe it's going to be like a bullish sign, especially if we look at the sentiment. Alright, admittedly the VIX was quite high, which I need to reset actually. I just remembered to do that. I'll do that now. I'll talk about the levels. So let's start with EJ. If you remember my video from yesterday, I was saying how, you know, we could potentially be a buy. I didn't take it, but the fact that we were a buy on the sentiment made me think possibly it was going to maybe do quite well. We've now got monthly pivot at 129.79. That's to see above is 130, so it's dead easy to remember. The one below is 129.35. They went long, but then it's gone sideways. UJ, and you'll note that this is buy here on the sentiment on the current ratio. Here's monthly pivot 11427. Monthly SLC above 114.55. The one below is 114. So, you know, we could draw like, I don't know, maybe a trend line here, maybe. Yeah, roughly, isn't it? Like, got 1, 2, 3, 4 respects. So potentially grab that, maybe hit some resistance. If we get a candle above, then we can go maybe back up to MR1, right? So yeah, keep an eye on your monthly pivot. You've got your levels. You can always screenshot or pause the video. Pound yen, and that level of interest was a good support. So it was a turncoat resistance, and now support. And So it's going to be an important level. That level is 156.02, so it's just really on the round number. SLC above 156.73, 155.35. We are a buy, like all the other cross yen. And also don't forget the this as well. You know, look at the Japanese index. It's up 1.25%. Right, so that's going to probably hurt the yen, right? So we have to bear that in mind. What else? Aussie yen. Aussie yen. There we go. And you probably know this is possibly, we're a buy there as well. That level of interest, which is a level, it was drawn from the support resistance lines. It's now there, so I'll put that there. So that level that they're saying from FX as a SI, the support resistance indicator, they're saying 82.62. The one above is 83, so it's easy, and 82. So that's bang on the round number, bang on the round number. Monthly pivot 82.08. So we are technically a buy because we're above monthly pivot, and we're a buy on the sentiment. So the recent price action on the indices could have been a ruse to get people to bail, potentially. I did say I was going to look at indices, so let's just quickly look at the S&P. In fact, I'll show you something if I can find it. S&P. So one thing that came to my attention was your weekly range low on the S&P is 4554 with 4547. Now we've exceeded the weekly range, and that would be kind of unusual because the range means that we should have price contained within, you know, the range, and we've exceeded the weekly range low. So really, we could potentially, technically, be coming back up above the AWR. Your daily range high, which is ADR, is here at 4586. So we can potentially come up to the ADR high and come back down to the AWR, which is the average weekly range, but we have exceeded it. So technically, ignoring all that macro and all that sentiment, technically we maybe have oversold a little bit. So yeah, there's your support 4580. That's quite amazing, and it definitely did totally break yesterday. But keep an eye on that level there. It's AWR, which is the average weekly range 4554, and there's your monthly pivot, and your weekly, quarterly, yearly open is up here, and this is where we opened on the year. Boom, boom, boom. Right, so be careful. Sentimentally, at the big picture, we are buy. However, the 24-hour difference is telling us that they're going long over time. So hopefully it helped. It looks like the yen is getting battered a little bit. Yen is currently mixed, and so is the USD. The pound is currently mixed. The euro is sell. The Kiwi is sell. Gold is buy. Oz is buy. CAD is buy, and the Swiss franc is buy. So it's quite tricky, to be honest with you. Maybe if the dollar and yen come down, it might start to get interesting, but currently they are mixed. So hopefully it helped. Remember to just take a step back, look at the big picture, look at your weekly chart, and then you'll see, oh, there's not really that much to get panicky about, really. I mean, look at your weekly chart. It's just small correction, and you're looking to buy dips, right? So that's that's it really. So hopefully it helped. I'm probably gonna go back to bed. So I didn't really sleep that much, but hopefully the video was useful, and I'll speak to you soon.